In this video, now we'll go through the steps to closing the book. So we went through the closing process, and these are the steps to close the temporary accounts, right? So in this hypothetical example, we're going to just assume, we're going to make it really simple. We're going to say that revenues, there's $100 in revenues. So the revenue account is here with a credit balance of 100. Expenses are 40. Instead of having different expense accounts, we just have one. And retained earnings has a beginning balance of 1,000, and then dividends, there's a balance of 10, right? So we have $10 in dividends, $100 in revenues, $40 in expenses. And then we have this new account called income summary. Income summary is a temporary account. It's only used during the closing process, and income summary is only used to record revenues and expenses. It summarizes the income, which is basically revenues minus expenses. So that's what income summary is. It summarizes revenues and expenses into one number before moving it to retained earnings. All right, so here's our steps. The first step is close revenues to income summary. And when we say close something, we mean make it zero or zero it out. So here's revenues. Revenues is $100 on the credit side. How do I make revenue zero? Well, there's only one way to make revenue zero. That is to put $100 on the debit side. So the step one closing entry is going to be debit revenues for 100 and credit income summary for 100. So over here, I'm going to put 1 and I'm going to put 100, right? That's going to make revenue 0. You'll see the 0 here. And then over here, I'm going to put 1 and I'm going to put in 100. All right? So there we go. All right, so that's the first step. So we close out revenues. So step one, revenues are now 0, and we moved it to income summary. Step 2 is close expenses to income summary. Well, again, if we look at expenses, expenses have a $40 debit balance. How do I make this 0? There's only one way to make it 0. I've got to put 40 on the credit side. So you see the process. The zeroing out process is whatever the balance in the account is, we just adjust the other side of the account for that amount. So here we have $40 in expenses. So I'm going to credit expenses for 40. So my second entry, or number 2, is I'm going to debit income summary and I'm going to credit expenses. So here I'm going to put number 2. I'm going to put 40. Right? Now notice expenses are 0, and I'm going to bring that over here to my income summary account. All right? So now my revenues are 0, my expenses are 0, and I come to income summary. Now notice what income summary has. Income summary has revenues of 100, expenses of 40, revenues minus expenses, that is net income. So 60 is really net income, right? So this is closing process when company has net income. I'll put that in there. Okay, so this is the closing process when a company has net income. So we have now $60 sitting in income summary, right? Well, we need to zero this income summary out. So what do we do with step 3? It says close income summary to retained earnings, right? So we're going to move the balance in income summary to retained earnings. Well, income summary has a credit balance, right? Revenues minus expenses. The revenues were more than the expenses, so revenues has a credit balance. So how do we close income summary to retained earnings when we have net income? Well, we're going to debit retained income summary, and we're going to credit retained earnings, because in order to zero out income summary, we've got to debit income summary. So we're going to debit income summary for how much? We're going to debit it for 6. So I'm going to put 3 here, 60. I'm going to debit it for 60. So you see now income summary is 0. And then I'm going to credit retained earnings for 60. Okay. That's the steps. That's the process. So now my revenues are 0, my income summary is 0, my expenses are 0, and I have steps 1, 2, and 3 complete. All right. And the last step is close dividends to retain earnings. Okay, so dividends has a debit balance of 10. How do I get rid of the debit balance? Well, I credit dividends. Okay. And the entry is actually right here. I didn't show it, right? I credit dividends and I debit retained earnings. So I move it over here for make this 4 retained earnings. Okay, so now my revenue accounts are 0, my expense accounts are 0, my income summary accounts are 0, my dividend accounts are 0, and my retained earnings has the cumulative of the revenues and expenses here at 60, and then dividends coming over here at 10. So this is the closing process when a company has net income, and that's it. The steps are the same. You're going to debit revenue, credit income summary. You're going to debit income summary, credit expenses. You're going to debit income summary, credit retained earnings. You're going to debit retained earnings and credit dividends, right? And at the end of this process, all revenue, expenses, and income summary are 0, and dividends are also 0, and everything is sitting in retained earnings. So you're basically taking all your temporary accounts, smashing it together, and you're moving it to retained earnings.